Welcome. You are listening to the Financial Survival Network. I'm Kerry Lutz. It's August 29th, 2017. Well, almost as if on cue. Gold yesterday broke through the 1,300 mark, almost like a hot knife going through butter. And as always, questions, comments, email us at kl@kerrylutz.com. So what of gold? What of silver? Is the rally going to continue onward? Is it running out of steam? David Morgan of themorganreport.com is with us now. David, how are you?
Okay, quite well. Thank you very much.
So we got this breakout. 1,300 was that number that gold just seemingly could not penetrate. I mean, half a dozen times in the past 4 months, it got close and then would run out of steam. Yesterday, it just burst through it. Right now, it was up $7, $8 the ounce. Now it's up at about $4 the ounce. What do you think is happening here?
Well, there's a lot of emotional buying in gold right now, some in silver, mostly in the gold market. It has to do with several things, but one of the big moves has been these missiles going over Japan, and that, of course, spooked the market somewhat, caused further buying in the gold market. But as we speak, doesn't seem to be that big a move. In other words, let me restate that. I don't think the move is going to carry much longer. And the reason I say that is that if it really was a real threat, whatever that means, the markets would be behaving differently than they are right now, which means that you would have seen a big sell-off in the Japanese stock market. You haven't. You would see probably more than a $10 move in gold, or you would see it, continue up. I mean, gold, as we're speaking, has backed off somewhat from what it achieved earlier in the trading session. So I am a bit skeptical. The last thing is the gold-silver ratio. In these type of situations, if you see silver really start to close the gold-silver ratio, meaning that silver is strongly outperforming gold, that is also a very good indicator that this situation has further to go and higher marks to make. That's not to say that we're not in a bull trend. It's not to say that the last quarter of this year is going to be better, but it is to say, and you asked my opinion, where are we going? And the answer is I don't think we're going a whole lot higher from here. Unless, of course, something happens in 2 days. I mean, I don't know the future. Let's say...
you don't. You've been around longer than me.
I'm criticized for that quite a bit. Yeah. But, let's say there is another missile strike and there is, it hit something or whatever. Well, all bets are off at that point, certainly.
Yeah.
But as it stands during this interview, I think it's a pop-up and a reconsolidation. And again, we're still in a bull trend, and a lot of people are not participating in this market that will later on.
What's really interesting, David, is when we look at the 1 year change, looking at Kitco's little box there, we're looking at gold is down $8.50 year to year. So last August 29th, or 30th, whatever, it was actually over at 1323, and everybody was rejoicing then, thinking that it would only go higher from that point. So your point here of not getting too carried away with this, not getting too optimistic, is probably a good idea, because we thought last year this time we were headed much higher, probably to 1,500, and look what happened.
Right, and if we just drill down on that a little bit further, if you don't mind. I mean, for example, last year, 2016, was a very good year for both the metals and the mining shares in particular, actually, up until about September or so. And then the gold and silver markets started to sell off to the end of the year. Traditionally, and this is hard to say these days because for the last several years, we've basically seen the lows in the metals basically on the last trading day of the year. 2016 was really no exception. You see the low took place in the gold market. I'm not talking miners, I'm talking gold itself in late December 2016. And then I forecast that 2017 would be similar to 2016, but probably good, not great. I consider 2016 to be quote unquote great because it had about a 4 or 5 year bear market. So 2017 started off at about 1130, and then we got all the way up to about 1250, and it bounced off of that and came down to below 1200. And then we shot up to about 1290, I'll call it 1300 level, bounced down to about 1220, back up to 1300, where it bounced off again down to the recent low in the summer in July. And that was just above 1200. And then finally, as you said, on the third try, which is typical of the commodities markets, gold did break through the $1,300 level. And the volume was a bit above average, not significant enough. And that's another key, Kerry, is that we need to see what the volume is like. If the volume was, let's say, 30, 40, 50% above normal volume, then I would be telling you something different than what I'm saying right now. I would say, no, this thing is going higher. I don't know how much higher, but definitely higher now. Again, can I be wrong? Sure. But I've been at this a long time. And there's, and that's what it is. I mean, there's that. So will we come back and test $1,300 level? That's almost guaranteed. I think we will. Will it bounce up from there? I don't know. Don't have enough data yet, but we're above the 50-day and the 200-day moving average. And the chart is very constructive. The lows for this year were, as I said, about 1140 in the beginning of the year. Then the next low was 1180. Then the next low was 1200. And all these lows are higher. So that's an uptrend. And that's something that people need to focus on if they're investors or long-term holders of gold. And again, to sound like, I guess, some of the more conservative in the industry, I'd put myself in that camp. I've never told anyone to go all in gold, go all in silver. I think it's the most important monetary asset you can own. I believe that. But that doesn't mean you go 100%. 15, 20% is probably fine. 10%, I would say, is a minimum for anyone that really understands what's going on in the global financial systems. And those people that don't, that's fine. They can make up their own mind. I'm certainly not here to tell anybody what to do. I do want to provide information, expertise, and 40 years of studying markets to give my strong studied opinion on what you might consider. But once that's accomplished, I've done my job. It's up to you to take action or no action.
Yeah. Well, a lot of people, David, are now ignoring gold because they think that Bitcoin is really where it's at. And as long as you have Bitcoin, you're going to be safe. What do you tell people like that?
Well, again, I try to let people be themselves. What I'm in the middle of, we're almost done with reading Jim Rickard's latest newsletter. And Jim, in my book, is a very good thinker. He's very clear, concise, and I find little argue with him. We definitely have different worldviews. He and I think we differ on a few aspects of the gold market, but I don't want to pick what's different about us. His basic thrust of this recent newsletter is that it's not as free a market in Bitcoin as you might think. Whenever there's this much money involved, look out for the regulators. And he makes a pretty strong case that regulation is just around the corner on Bitcoin and basically the whole crypto sphere and designated ledger, the Ethereum situation.
Right.
And I tend to agree with them. How many times do the bankers lose? And the answer is not very often. When there's money involved and there's no regulation, money is a very powerful motivator, especially for the control grid, which is the powers that want to be, or however you want to term them. And so if Bitcoin were at the level it was 5 years ago, they'd probably ignore it. But where it is now, and with all of these, cryptocurrencies are coming on board almost daily, really, there is going to be some infiltration into the blockchain scenario that will be mandated by those powers. And I agree with them there. I don't agree with it philosophically, by the way, but that's not the issue. The issue is, how safe are you and what's going to happen? And if you make a big score in Bitcoin, good for you. But if you don't report it and there's a way to trace it, you might get a knock at the door or a letter or whatever. And I don't want to scare anybody. I'm just basically repeating back what I just read over the last this morning. But I think he brings up a lot of points you must consider. So, and also, of course, the parabolic move. I mean, anytime any market, Bitcoin or not, goes in a parabolic move, those exponential functions usually don't last forever. And that's another thing to consider. So, I like to look at both sides. I mean, I'm pretty neutral on Bitcoin. I like the blockchain idea. I think Ethereum is a pretty cool tool, but there's a lot of abuse in this, as there was at the .com move. I've made that analogy before. And I think there are those that will continue on and make a significant difference in the monetary system going forward. But also look for, if it's that good, look for the powers that be to come into the space. And they are. I don't have the article in front of me. I left it in the other room, but he makes a point about, our friendly friends, JP Morgan, the SEC, on and on. I mean, this conglomerate of very powerful financial elites looking at doing a blockchain type of situation. So I'm a bit skeptical still.
Well, I know for a fact the Federal Reserve is definitely exploring this, because a friend of a friend who we've known for a long time is actually working for the Fed, doing it now. It's not going to come in all likelihood in the U.S. It'll be in Europe before it happens. But look, it's so simple. If they want to make Bitcoin untrustworthy, right? If the powers that be want to make you distrusted as a currency, as a medium of exchange, all they have to do is make it go up to 5,000 and then crash it. They made it go up to 1,200 before, or it went up to 1,200. And then what happened? It went down to 200, and it definitely hindered Bitcoin's acceptance. How hard is it, David, if you were of a manipulative bent to make these cryptocurrencies go sky high and then crash them?
Yeah, I mean, it's a very unstable financial system, unstable world in a lot of ways. And these type of alternatives are very appealing to a lot of people that can think on their own, have critical thinking. And again, I'm not against that. I'm for that. But you got to be a bit careful. Just because an idea comes along and someone piggybacks on it, you want to be very careful on some of these situations. And even the tried and true ones, such as Bitcoin and Ethereum, what, as you say, I'll pair it back to you, Kerry, what is to prevent the ability of somebody to come in and basically manipulate the market? And Jim goes through this in his newsletter. I mean, he talks about putting up an exchange and how the exchange could be frauding people over time, look really good and settle all transactions and be on the up and up, and a great website and great customer service, and on and on and on. And that goes on for months, but they're really not buying Bitcoin. They're buying Bitcoin and sticking it in their back pocket, and they're just making an exchange so that you see everything come through and it looks all good on the up and up until you go to cash it out or whatever. And then you realize what you have, it's not what you thought you had. So, I'm still back to maybe it's my age, maybe it's my 40 years studying the monetary system, maybe it's a lot of things. It's certainly, you don't have to agree with me. I mean, I've been a maverick my whole life. Sorry to talk too much about me, but, I've been out there when no one else was. I mean, just very, very few of us. And a lot of my contemporaries are deceased. I mean, I was learning from guys that were, 45, 50, 60 years old when I was 20 years old. Right. And a lot of these guys no longer exist, but they taught me a great deal. And one of them is, the theory of money. I mean, either money is something of substance or it's not. It's either a legal fiction, and usually the legal fictions are controlled by the governments. They're really controlled by the banking elites. I want to make that clear. I mean, even Rickards talks about government controls the money. No, they enforce the power of money, but the bankers control the money, and the U.S. government and all other governments, with the exception of very few, are at the beck and call of the bankers that create the money, and the money is borrowed by the government into existence. So let's be crystal clear about that.
Absolutely.
And then the government has the power of force, which means basically the end of a gun, to make you comply with that monetary system.
Legal tender laws.
That's the truth of the matter. Now, when I first heard that from one of my contemporaries, I didn't really like it because I didn't really thought about it. But after I sat down, read, studied, learned, and really did some critical thinking, it's absolutely true. It's the power of force that dictates what is money and what isn't. So you've got a legal fiction backed by the power of force, or you have a free market money that people agree on for the most part, and that's substance money or specie money, which is gold and silver. That's what's been the elected one over thousands of years. Yes, you can have cows and rice and you can have sand, you can have candlesticks. I mean, I get that, but really the truth of the matter is that gold and silver are specie money, and they have been for thousands of years. And you can't make that statement about any currency backed by force ever. And that's what concerned me so much when I started this trek of mine, this call to duty of mine, that I felt it was my imperative, absolute calling to make certain that I could await. And it's not about me. It's the message, not the messenger. I'm one of many messengers, Kerry. You have many on your show. And,
Sure.
It's not David Morgan. It's the idealism. It's the thought process. It's the message. The message is all fiat currencies have failed 100%.
Mm-hmm.
And if the dollar isn't, then tell me why. And broadcast it to everybody because I want to know.
Yeah,
and it is failing as we speak. And so that was my call. And as long as I can get people to understand that. Now, what's the best protection? And I wanted to kind of call you before the show and request, maybe going off on a bit of a tangent because, if you go back a couple of decades or even 15 years, I would have told you at that time that, honest money, 10% in gold and silver basically would save your bacon. You'd be fine. And I've absolutely revised that view in the last several years because there's so much going on outside of the monetary system that are really upsetting our day-to-day lives. And I'm not very well studying these, but I certainly look at them. But, what's going on in the atmosphere, what's going on in the water supply, what's going on in the food supply, what's going on with the electronic warfare, what's going on with this 5G grid. I mean, all these things are interplaying with each other. So there's so much more to be aware of and make your own opinion, studied opinion, informed opinion about. And at this point, money can be a help, but that's all it's going to be. There's so much more you need to prepare for than just a monetary upheaval of some type. And even if I'm wrong, and there isn't another 2008 type of situation. I believe there will be, but let's say that it doesn't happen. There's a lot more to be concerned about that may, really usurp the monetary system. And let's just do a real quick thought experiment. If you have an ecological disaster where basically you can't grow enough food on the planet to feed, and already there's people starving. I'm not insensitive to that. But let's say that the amount of starving doubles because of crop failure throughout the world because of weird weather, blight, erratic, activity. And then what happens? You can have all kinds of money, real money, all kinds of gold. But if there isn't enough of the foodstuffs, then what do you have? So I'm basically, been thinking about this situation, the situation that faces the global citizenry and what is being done and what is not being done about it and where our focus is. I mean, I think, as harsh as this may sound, I think the focus on Bitcoin and the monetary system is a little bit of a heads up if you're paying attention or doing some critical thinking that we're focusing too much on money and not enough on what the real problems are.
Yeah, I think there's a real argument to be made for that because the problems that we're going through here really do transcend money, and they might very well be existential issues that if we don't straighten them out, they're going to straighten us out. And like you said, maybe this is a big distraction that's really not doing us any good.
Exactly. I mean, just to add on to that, Kerry, I mean, when you've got, so much of the economy based on, financial transactions, meaning you're moving some digits around from one account to another, it doesn't really produce anything physically in the economy that benefits everybody. And this is the case we're at. This is where we are. And this is where the tops are. This is where the collapse begins. And this is where we are once again. I mean, it happened in 2008. And I think we're in a setup again. In fact, I'll put my neck out again and, I'll get all the trolls calling me, telling me what they think of me. And that's fine.
We all have our trolls.
I've been told that my whole life. So it doesn't really have much meaning to me.
Who cares?
I laugh and and it's humorous to me. But the point is that we are in a situation where this whole thing could start because of a stock market conundrum that takes place September, October this year. So sticking my neck out, I'm implying that it could, not would, happen maybe by the end of this year.
Yeah.
And of course, yes, there are algorithms and the quants have it and the SEC and the Federal Reserve and everybody in the working group on financial markets, the plunge protection team. They're there. It's it won't happen because they won't let it happen. Well, you know what? It could happen even with all their power. It really could. So that's what we're facing. Is it going to happen? I don't know. One other point I haven't made about the gold situation, circling all the way back to the beginning of the interview. Gold moves opposite the stock market. Now, everyone's going to tell me I'm wrong. It moves opposite the dollar. Yes, it does somewhat, but it actually moves. It's a crisis hedge, and it's a forebearer of what's happening in the physical economy. So right now we're in a fictional economy, meaning everybody's paying attention to some number on a screen about how well the Dow is, the NASDAQ or the S&P 500 or the Russell or whatever, and saying, look at these big, big numbers. Things are wonderful. When that's anything but the truth. Truth is the physical economy tends to digress, and gold is basically sideways. I mean, it's busted the $1,300 level we just spoke about. So we are in a situation where we have something very, very overvalued and very undervalued. And once those metrics change, then you're going to see what gold does best, and that is move opposite the stock. Mm-hmm. And that's why I'm forecasting potentially, I just going to put it out there more of a question than as a forecast. What if the stock market started down in a serious way in the fall months and gold reacted to it in a significant way? What would take place then? And I think that's a very likely scenario.
Yeah, I'm inclined to agree with you. I mean, like this real economy here, we're into the paper economy. Like how many people, David, have jobs just moving money around from point A to point B and then back again? And you know, it's millions of people who are doing this. What are they producing? I mean, I must be missing something here. What is their contribution to the economy, to society?
No, it's a top. I mean, this is where you were in, Mississippi bubble and, tulips. I mean, you get in this situation where people think that they can do basically nothing and get something for it. I mean, I don't want to be too critical because, again, I like people to be themselves. And a lot of the best lessons I've learned was by doing something that probably was not in someone else's best interest or even in my own best interest. And I had to learn it the hard way, this type of person I was. Mm-hmm. But this, again, is just kind of a forebearer of the idea that, financial transactions are where it's at. You don't really have to put in the effort. And that's a sign of a top, not a bottom.
Yeah, and it's a sign that there's going to be some type of realignment of society, right? I mean,
and I want to go one more step. I know we've not got a lot of time left on your show, but
sure.
When the Soviet Union collapsed, there were basically two scenarios that took place for their satellites. One satellite was North Korea, and the other satellite was Cuba. In North Korea, the people starved. In Cuba, the powers that be at the time said, basically, something democratic. They said, look, there's not enough food, so all public lands that are available are yours, and we encourage you to grow food. And so the Cubans went out and planted all kinds of gardens everywhere that they could. And they basically flourished during this collapse period because everybody worked. They're not trading digits back and forth. They're out there hoeing the ground. Mm-hmm. I mean, as archaic as that sounds, no matter if you're a criminal or not, everybody likes to eat. So the point is that Cuba came out during this same collapse, the Soviet Empire collapse, basically better than it had been before. They're growing basically organic food and everybody's pretty much getting enough to eat. Whereas North Korea was at the beck and call of what could the Soviet Union ship across the border to them to keep them from starving. And these are things to keep in mind. And this isn't a thought experiment. Look it up. Don't believe me. Take a look. In fact, the person that I think brought it to my attention first was the late, great Michael Rupert.
Mm-hmm. Yeah, well, it's very true. Although they managed to eat, but not do a whole heck of a lot else. If you have a chance to go to Cuba, you really should. Those people have suffered beyond belief.
I'm not in any way trying to state anything but the objective truth there. No, I'm not saying. No. I to make that clear, and I'm sure you probably you know me very well, Kerry.
Oh, absolutely.
The point is that it takes work to eat. And, this idea of digits only. No, there's some, what is the best, system? And boy, that's a question I still struggle with. I mean, is true free market capitalism the best? And I tend to believe, yes, still. But, there's so much regulation in there. Basically, I mean, my conclusion is similar to what it was 20 years ago. And I haven't written about this in a long time. The laissez-faire free market that's basically unregulated works if and only if. And I'll repeat, if and only if you have a moral structure of the society that's so strong that the moral undertones of the entire population is basically good to very good. If you don't have a moral structure where you tell the truth always and everywhere, as much as humanly possible, then, free market capitalism becomes the how much can I rip you off for? Oh, it's a free market, I deserve it type of an attitude, which is morally wrong. So, that caveat is one I haven't given for a long time. But you go back to the founding and you look at it, and the founders are very clear about that. If you don't have a morally sound, strong populace, if your citizenry isn't morally strong, look out. It's not going to work. And where are we today?
Absolutely.
And I'm not a prude, but honest to goodness, some of this stuff is stuff that you couldn't imagine in a sci-fi movie. It's so bizarre.
Hey, when founding fathers drafted the Constitution, they said that it would only last, or I don't remember which one said it, as long as men remain honest and true. And but if people aren't honest and true, then there is nothing that any government can do to keep things running. And I think it's just something that we find out over time with, ends of empires, whatever. They start out with high morality and they end with real decadence, degradation, and they collapse, right?
Right.
So I think that's what happens. In any event, find David's work over at themorganreport.com, and his podcast is on iTunes. Just go over to the iTunes store and type in David Morgan or The Morgan Report and click subscribe. It's easy. Any questions for David or myself, just send an email, kl@kerrylutz.com. The Twitter feed's at Kerry Lutz. Facebook page is Financial Survival Network. David, we will talk to you again real soon.
Thank you for having me, Kerry.
FSN Radio. It's all about what's next. Go to financialsurvivalnetwork.com and sign up for your free weekly newsletter. You'll also get 3 free
higher from that point. So your point here of not getting too carried away with this, not getting too optimistic, is probably a good idea, because we thought last year this time we were headed much higher, probably to 1,500, and look what happened.
Right. And if we just drill down on that a little bit further, if you don't mind. I mean, for example, last year, 2016, was a very good year for both the metals and the mining shares in particular, actually, up until about September or so. And then the gold and silver markets started to sell off to the end of the year. Traditionally, and this is hard to say these days because for the last several years, we've basically seen the lows in the metals basically on the last trading day of the year. 2016 was really no exception. You see the low took place in the gold market. I'm not talking miners, I'm talking gold itself in late December 2016. And then I forecast that 2017 would be similar to 2016, but probably good, not great. I consider 2016 to be quote unquote great because it had about a 4 or 5 year bear market. So
welcome. You are listening to the Financial Survival Network. I'm Kerry Lutz. It's August 29th, 2017. Well, almost as if on cue. Gold yesterday broke through the 1,300 mark, almost like a hot knife going through butter. And as always, questions, comments, email us at kl@kerrylutz.com. So what of gold? What of silver? Is the rally going to continue onward? Is it running out of steam? David Morgan of themorganreport.com is with us now. David, how are you?
Okay, quite well. Thank you very much.
So we got this breakout. 1,300 was that number that gold just seemingly could not penetrate. I mean, half a dozen times in the past 4 months, it got close and then would run out of steam. Yesterday, it just burst through it. Right now, it was up $7, $8 the ounce. Now it's up at about $4 the ounce. What do you think is happening here?
Well, there's a lot of emotional buying in gold right now, some in silver, mostly in the gold market. It has to do with several things, but one of the big moves has been these missiles going over Japan, and that, of course, spooked the market somewhat, caused further buying in the gold market. But as we speak, doesn't seem to be that big a move. In other words, let me restate that. I don't think the move is going to carry much longer. And the reason I say that is if it really was a real threat, whatever that means, the markets would be behaving differently than they are right now, which means that you would have seen a big sell-off in the Japanese stock market. You haven't. You would see probably more than a $10 move in gold, or you would see it, continue up. I mean, gold, as we're speaking, has backed off somewhat from what it achieved earlier in the trading session. So I am a bit skeptical. The last thing is the gold-silver ratio. In these type of situations, if you see silver really start to close the gold-silver ratio, meaning that silver is strongly outperforming gold, that is also a very good indicator that this situation has further to go and higher marks to make. So 2017 started off at about 1130. And then we got all the way up to about 1250, and it bounced off of that and came down to below 1200. And then we shot up to about 1290, I'll call it 1300 level, bounced down to about 1220, back up to 1300, where it bounced off again down to the recent low in the summer in July. And that was just above 1200. And then finally, as you said, on the third try, which is typical of the commodities markets, gold did break through the $1,300 level. And the volume was a bit above average, not significant enough. And that's another key, Kerry, is that we need to see what the volume is like. The volume was, let's say, 30, 40, 50% above normal volume. Mm-hmm. Then I would be telling you something different than what I'm saying right now. I would say, no, this thing is going higher. I don't know how much higher, but definitely higher now. Again, can I be wrong? Sure. But I've been at this a long time, and and that's what it is. I mean, there's that. So will we come back and test $1,300 level? That's almost guaranteed. It's not to say that we're not in a bull trend. It's not to say that the last quarter of this year is going to be better. But it is to say, and you asked my opinion, where are we going? And the answer is, I don't think we're going a whole lot higher from here. Unless, of course, something happens in 2 days. I mean, I don't know the future. Let's say...
you don't. You've been around longer than me.
I'm criticized for that quite a bit. Yeah. But, let's say there is another missile strike and there is, it hits something or whatever. Well, all bets are off at that point, certainly. Yeah. But as it stands during this interview, I think it's a pop-up and a reconsolidation. And again, we're still in a bull trend, and a lot of people are not participating in this market that will later on.
What's really interesting, David, is when we look at the 1 year change, looking at Kitco's little box there, we're looking at gold is down $8.50 year to year. So last August 29th, or 30th, whatever, it was actually over at 1323, and everybody was rejoicing then, thinking that it would only go higher.